Hi subscribers and welcome back to the channel. Today we're going to be talking about long-term non-UK residents and the 10-year rule from an inheritance tax perspective. As a Brucey bonus, I'm also going to be talking to you about the 4-year rule on foreign income and gains, which is very important if you were to be heading back to the UK. Now, before I get into the topic, on our channel, the very best thing you can do to say thank you for the time and effort we put in is just hit the subscribe button below. Currently, only 11% of subscribers are actually, 11% of viewers are subscribed to the channel. It was 10%, we've had a push, we're now up to 11%. We really want to see this rise, and genuinely, it's the very best thing for my digital marketing team to see that the content we're putting out there is valued, and it's the best thank you you can give us. And in return, we promise to invest more time, effort, and money into the YouTube channel to bring you even better free educational content. Okay, so let's get into it. Long-term non-UK residents. What does this mean? Okay, I'm going to take the definition here, well, the commentary here from the FT advisor in the UK. So from April 6th, 2025, time is April 7th here, the test for whether non-UK assets are in scope for IHT will be whether an individual has been resident in the UK for at least 10 years, 10 out of the last 20 tax years, immediately preceding the tax year in which the chargeable event, including death, occurred. The time an individual remains in scope after leaving the UK will be shortened, where they have only been resident in the UK between 10 to 19 years. So why is this so important? Okay, now a lot of my clients had the ghost of domicility chasing them around. Dominic, I want a tax report. Dominic, I don't understand. Dominic, I don't understand domicility. Dominic, domicility is driving me mad. I had clients who lived in Dubai or wherever it might be for 10, 15, 20 years, but still, from a UK inheritance tax perspective, their estate would fall under UK rules from a domicility perspective. Now, Rachel Reeves and the budget, autumn 2024, wanted to bring this in line. And effectively, what the government was doing was they're saying, look, if you're here in the UK, you're paying tax. None of this non-dom status anymore, but the winners of that have been people who are already outside of the UK for 10 out of the last 20, the immediate 10 of the last 20 years. From a tax perspective, things have got very interesting for them. So previously speaking, if a client, say, had £1 million property in the UK, £1 million property in America, and £1 million property in Dubai, or whatever it might be, technically speaking, before the 6th of April 2025, those assets probably would have been deemed for UK inheritance tax based on the individual's domicility. So very, very important. Now, for a lot of my clients, this has basically made the decision for them. They were wondering about retirement. Should I go back to the UK? Are we going to go do this? Are we going to go to Spain? A lot of them now are saying, well, why would I go back to the UK and have all my non-UK assets subject to, or potentially subject to UK inheritance tax, when I could just stay outside of the UK? I could use my restrictions, and now I know the exact number of days I'm allowed to go to the UK each year. Let's just use those rather than take the risk of becoming a non-UK resident again. Now, best made plans. We all know if you get pretty ill health, unless you have very, very good health insurance, a lot of UK expats do eventually go back to the UK, because whilst everyone likes to hate it in Blighty, the NHS is a pretty high level of professional service, which is free at the point of use. But whatever, very interesting change from the UK government. Now, what I'd like to talk to you about next is the 4-year rule on foreign gains and income that is coming with this as well. So what this means is that, say you were to return to the UK, or you had no choice, or you wanted to go to the UK, in those first 4 years, you would be able to caveat out any gains and whatnot that you're having from foreign income. The reason the UK government is doing this, in their words, they're trying to attract people back in and scare them, not scare them off, with knowing from day one in terms of their income, etc., would be taxed. Now, this is a very specific area of tax advice. Here at Cameron James, we're obviously not authorised and regulated tax advisors, but we will always give our clients the information, the guidance, and the publicly available knowledge as part of their financial planning advice process. And if clients ever want to verify that, we obviously put them in touch with a number of trusted tax advisors we have for either UK expats, different parts of the world. We have tax advisors who specialise in each jurisdiction. If you have any questions at all, or you'd like to speak to ourselves about your plan for heading back to the UK or not, you can book in below at a day and a time which is suitable for you, using the canned link to speak to one of our regulated financial advisors. And as always, take care of your UK pension assets.